It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening. It's already September the 1st, 2015. The month of August is behind us. Some of the best trading opportunities come in the month of September, October, November, December, January, February, and the first 3 weeks of March. Boy, oh boy. Buckle your seatbelts. Keep your helmet on from earlier today. Was there enough volatility today? Apparently, the month of September felt a little bit jealous that it wasn't given enough opportunity like August did. Jeez Louise, what volatility. A day trader's paradise today. I have so much to talk about today, and I better get to it because we got a holiday shortened week. Friday's basically a quarter of a day, right? We've got Monday as a holiday, Labor Day weekend. I hope you got your plans already made. It's a big, big weekend coming up in the U.S. I won't take any more of your time jibber-jabbering. Before we jump into tonight's newsletter, and boy, oh boy, crude fails. S&P now has a spike in channel down. Euro and gold still respecting that range. Got a lot to talk about on tonight's newsletter. Before we jump in, though, I do want to remind you guys, make sure you're watching this video on our trading blog here at Sideways Markets. If you're on our YouTube page right now, there's a link right in the description of the video that will take you right to our blog. There's a bunch of reasons why you might want to be watching this video on our trading blog this evening. First of all, if you're not a member here at School of Trade and you'd like a free pass, come out and join our trade room for a day or a couple days this week as a guest. Grab your free pass, upper left-hand corner. Also, we have a nightly newsletter mailing list every evening about 8 p.m. Eastern Time, give or take a tick or two. I'll send you an email, let you know that newsletter is ready to go. That way you never have to worry about missing another newsletter ever again. And then right below the video, you'll see a link right there below that video on the blog where you can download all the charts you're going to see in tonight's video, right? How about that for benefit of watching on the blog? And then, of course, over on the right-hand side, you can join our free trial here at School of Trade, test drive membership. Beginner, intermediate, and advanced levels of membership at schooloftrade.com. You can also learn more about membership. You can read real member reviews. And please don't forget, I've always got someone standing by 24/7, 365 to answer all your questions if you need any help along the way. I think that covers it, JJ. Enough of the flapping of the gums. Let's take a look at some charts here. Boy, oh boy, what a day, what a day, what a day. Boy, I thought they really had it this time. I know I said that last time, but I thought they really had it this time. Apparently, no. And the Bulls, and I said this last week, and I've said it again yesterday, I can literally count on one hand the entire year of 2015. That's like 9 months of saying the Bulls are in control. I'm sorry, the Bears are in control, right? It just seems my mouth just won't even enunciate the word Bulls in control, right? I thought they had it. Yesterday's bullish spike in channel. Now, was today a complete loss? Hell no, right? If you followed our plan from last night, that line in the sand, right? Remember, my exact words last night, of course, if you didn't watch last night's newsletter, boy, oh boy, you missed a great newsletter last night. Spike in channel up, right? Bull spike in channel. That says white hot. Bulls, 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 bulls. And so I said last night, I said, be ready for the deep pullback and buy it. So we bought the first one. Beautiful opportunity right off the bottom of that range. Beautiful. Comes right back out. Tumbles right back down. And we go, all right, here's the chance right here. This is where we knew it this morning. This is where, and if you were trading it in real time, you felt the pain, right? At a certain point this morning, we noticed that there was such light bid and ask volume. I mean, we had gaps on both sides. We looked at the chart. We're like, whoa, there is a you know what coming, and someone's going to get run over right now. And then all of a sudden, exactly what we said last night. Remember what I said last night? When we get that deep correction, we're not going to buy it. We're waiting for who? Go back and watch last night's video. We're going to wait for the sellers to fail because that's what we were trying to do. They tried once, but they never failed. Once we got that new low, we knew it was on. It was on. And my exact words were, we're definitely going to 45. Got that in a heartbeat. and we'll most likely be recording that newsletter down at 44. And just to throw some giggles in here, we're at 43.94 here. What happens when a bullish spike in channel fails? We go all the way back to the spike. Sorry, I'm getting a little bit excited over here. This is the good stuff, boys and girls. This is the good stuff. Like I said last in the newsletter, print this stuff out, put this on the refrigerator, because you see these 7 to 10 times a month. And they are so predictable because of what? Because of the crowd psychology that we talked about last night. I'm not going to go through it again, but boy, oh boy, we got exactly what we expected. We expected a deep correction. We got the first nice opportunity off of it, right? Don't get me wrong, it was brilliant. But it quickly came right back down. And once we saw us sitting around 47, we said, all right, if the sellers fail here, we go to 50, right? Literally. Not the case. Sellers never failed. And once we got that next lower low, it was on like Donkey Kong. Now, what we talked about today in the trade room was, what was the strategy, members? If you're a member with me in the trade room, what was the strategy today? After we saw it break below 47s, it was, I don't care how high it goes, as long as it stays below 47.13. Remember, that was the line in the sand for us. You sell that sucker back down. And it gave you a beauty, which of course ends up being a bearish spike in channel back in the opposite direction. Oh my goodness. Oh my goodness. Now, the news media is blaming this on some shenanigans out of OPEC and talking about Chinese buying up all this. Not that I don't doubt for a second, right, that there is some shenanigans going on. But this is just a great example of forget about the newspaper. Who cares about what really is going on? Does reality make me any money? I mean, think about it. How many examples in this world does what's really going on make me any profit? Very, very rarely. As the average consumer, we don't even see what's really going on very often. So the moral of the story is, when a spike in channel fails, you better be on that. Today was a great example of it. The second moral of the story is, put down the newspaper. While you were busy trying to figure out what the heck devaluation of Chinese currency, blah, 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 all that means, you're missing all of this money to be made in these markets right now. What an incredible day. What an incredible example. And going from last night's newsletter back to where we are tonight, now you can see exactly where the rubber hit the road here. Boy, oh boy, this stuff really, if this doesn't blow your hair back, you're in the wrong business. You're watching the wrong video right now. This is dipped in crude oil, why don't we say. Now, where are we for tomorrow? Back inside that trading range. Now, let's look. We went all the way up and came all the way back down. We are pretty much completely in balance at this point. You can almost, at this point, go back to Sunday night at 6 p.m. and go, mulligan and redo, let's start over again. Because as far as I'm concerned, this price action just cancel each other's out. It does. We're right back to where we started from. Right? Now, that would make for a very entertaining newsletter saying, all right, we're back to this trading range. So, of course, we do have another spike in channel coming down. So let's take a look at the plan for tomorrow. I'm going to take a breath for a second. Jeez Louise. You got to love this stuff. So we're bearish after the spike in channel collapses this morning. Now, our line in the sand of 47, which is broken, we find ourselves back in the range from Monday, which means we're going to trade this like a range and wait for the breakout opportunities, right? When we're back inside of a range, we're looking for the buyers and sellers to try twice. Until they successfully try twice and hold outside that range, that trading range from 45.02, we'll say 45, down to 44, right? That's the area you want to really pay attention to from now on. Now, this crazy animal, I don't expect to stay in there very long. But as of right now, all I know is that we have back inside this trading range, which means I am going to question every breakout of this range until what? 2 tries, and we stay outside the range after that second try. I'm going to give you all the fine details of that tomorrow morning in my live trade room, right? We don't know enough yet, but I do know right now we are bearish bias, but just a little, just a little. I consider this to be a clean slate here for the buyers and sellers in all reality. What I do know is this, though. This bear spike and channel down, since now you guys and gals are experts on spike and channels, we know the big correction, A, B, C, D, going on down, right? So now we know there's definitely some major support at 43.33. So here's what I would expect to happen tomorrow. We already saw the sellers dip their toe in the water of this range earlier on this week, right? That was, that was on Monday. What do we got here? About 10 o'clock in the morning, right? Sellers tried to get their beak wet there going lower. That's the first try. So now I definitely could see this making our second try down in this 43 half area. Okay, that'll qualify for a second try. Members, you know what I'm talking about. And the line in the sand is 44.06. So assuming, right, this is an assumption for tomorrow, assuming we go below 43.62, complete the channel, right, complete the spike and channel, right, because you know they're going to try to do that. I mean, heck, they've collapsed all this way. Why not finish the job, right, down to 43 to 43.07, somewhere in that area here. Then I would definitely expect some profit taking, but if we slip back above 44.06, then we have to, again, treat this as a range. We are only going to be bearish now after we see a second try. I don't know where it's going to go, neither do you, right? And I guarantee OPEC doesn't, I'll tell you that much. And based on the efforts from China, they don't know they don't know either, right? And then 44.06, that's our line in the sand. So the name of the game for tomorrow is, you gotta, I mean, I'd be lying to you if I said I wasn't a little bit bearish after seeing this all collapse today, right? A little bit bearish, but I have to go in with a clear mind tomorrow. We are fading every breakout of this range, bullish or bearish, until we see two tries to stay outside. Oh my goodness, what a day on crude. And of course, this long-term bear channel, right? Keep an eye on that rotation all the way back. I don't know how much I give this channel any credit. You know, we don't really get much out of it here. It's not a very good-looking channel there. So call that a phantom channel right now, right? Call it a phantom channel. But I could definitely see that channel come into play here later on tomorrow. Guys, I can't wait to get my hands on that market with you guys tomorrow, live in real time in our trade room at schooloftrade.com. How about the S&P? I better get moving here. How about the S&P 500? S&P is bearish after selling successfully twice and kept outside the range. Now, I'm sure many of you probably said, oh, really? Boy, Joe, you must have lost a lot of money on this today, right? I mean, clearly you got it all wrong. No, remember, guys, first try, there was our trading range right here, right? First try, yep. First try, second try, and we stayed below the range. Bingo. That tells us as soon as we see that second try, now we know as long as we stay outside that range, we are bearish. And that means price goes up and still comes back down. I'm still bearish. Now, at that point, every time it goes up, you're looking for failures. Every time it goes up, you're looking for failures. If you're with me today in the trade room, if you're in our chat room today, right, what was John Henry saying all morning in that chat room this morning? Sell it, sell it, sell it, sell it. So we knew. And again, we knew pretty much right at the opening bell this morning this was going to be nothing but a bearish day here on the S&P. Now, what does that lead us into? Another spike and channel, right? Boy, this is the I'm glad we learned this yesterday because it's coming into play again here. Spike down, lazy channel. Yep. Lazy channel. And what does that mean? That means we're likely going to see a larger correction before we make that next leg down. So you've got to be a seller right now in the S&P until what? Where would the line in the sand be for sellers tomorrow? Right there. Let's say 1940. Right there. That's going to be the line in the sand right there, 1940. We're likely going to get a correction back up. And then we'll stay focused on buyer failure as it comes down off that big correction. You're not going to sell that big correction you're going to use buyer failure to get short into the stop losses of those buyers who are trying to take it all the way back up. And then, of course, if we don't see those buyers fail and they keep on going, just like today we talked about on crude oil, you get a chance to go back to where we came from, right? Back to the beginning of the spike down. Spike in channel says strength. Don't get fooled by the big correction. Keep looking for selling opportunities at the highs of this channel, with the best opportunities being after a big correction. And again, after you see that big correction in this spike in channel, what type of pattern are you going to use tomorrow? Buyer failure. After the big correction, you're not going to sell it with a sell pattern. You're looking for a buyer failure pattern to get short. Because what's going to happen is it's going to give you a lot of false signals to sell it. Wait for the buyers to take the bait and fail. Because that's what makes a spike in channel such a special pattern, is it confuses the wrong side of this market into thinking that the big correction is really going all the way up. And it might, right? It might. Like we talked about last night on crude, it's relatively rare for the spike in channel to fail, but we got one today. We got one today. You can't say we weren't ready for it. So now, second thing that I see on this is we have another trading range. This trading range is a very good example of another way that we can look for where that big correction could be here, right? Back up to the high of that range. Okay, so we got our first try to go lower. Second try to go lower is coming next. If we stay below that 16.5, right? If we stay below that 16.5, now we know we're bears, right? So as of right now, I am in fade the breakout mode on the S&P. I broke out once. Will they try again? We'll have to wait and see. We know for a fact, though, until we see a second attempt and we stay below that 16.5 area, we know we're bearish. Okay, but until then, buy it right back up into that range. And of course, again, that will lead us right into a big correction after that spike in channel. And when we get that big correction, I think we're going to probably get it. But if we don't get it, we know we're bearish, right? If we do get the big correction, though, which is very likely at this point, then we're looking for, what was it again? Buyer failure as it comes back down to sell this sucker right back down. Guys, targets on the way back down here, range expansions, range expansion targets, trend line targets, right? You got some easy levels there waiting for you. And again, just join our chat room tomorrow, right? John Henry loves this market in our chat room. He'll be all over this thing with you guys tomorrow. Starting up at 8 a.m. tomorrow morning on the S&P. Now you get the plan here for the S&P. Ooh, gold. Let's jump into the yellow metal here, the gold futures. Now, here is a very good example that every rule is meant to be broken. Every rule always has a little bit of interpretation. Now, I know how it goes, guys. When you're a brand new trader, you're looking for red light, green light, right? When the chart flashes green, I just buy. I don't know why I buy. I just buy, right? That doesn't work. And I think most people who have a little bit of experience in the financial markets, they've come to understand that there are plenty of rules that we use, but at some point, we got to use what's between our ears, right? Even if some of us have nothing but air in there. I'm talking about me, of course. I'm not the smartest guy in the world, but I know how to read the candlesticks. I know how to read the price action. Here's an example where we have a very clear example of two tries to break out of this range, but there is smoke billowing out of the smokestack right now, saying these buyers are really struggling right now. Who is calling me right now? Let's keep going. We have a trading range here from yesterday's newsletter. That's going to be your main concern right now. Here's why. We jump up, first try, second try. Now again, with that second try outside that trading range, anything above 1134.4 is bullish. But here's where we do a little bit of interpretation that tells me I'm expecting price to find its way back to that range again. You'll see here I've marked up some bull traps. It's a little bit tough to see this. Let me zoom in a little bit. Notice these candlesticks here. Notice these candlesticks here that are marked up. They're a little bit different shade of red, right? we have a little indicator here. We don't rely much on indicators here at School of Trade, but this is one indicator we like, and that allows us to identify bull traps in the market. This is a great example of a bull trap. You can also see bear traps over here, right? Bear trap there, bear trap there. I don't see any others there. But those red ones, those are bull traps. Those are hit and run bull traps. And you can see what happened here. The buyers did a great job holding it up for the second one. But now, again, we don't have any proof of this yet. But there is smoke that is billowing out of this stack, going buyers tried, failed, buyers tried, failed, buyers tried, failed, buyers tried, failed. There's like a half dozen bear traps, which just tell us the buyers kept trying to buy it, but for whatever reason, they just couldn't get the job done to keep this price going higher. Now what we see is, and this is what really did it for me, was now that moving average. Notice how the moving average is acting as support here. See how it's kind of caressing the price, right? Boy, that was a horrible vision right there. Bottom line is, we see the moving average kind of holding that price going higher here. Well, look what happens now. We sliced right through that moving average like a hot knife through butter. And now that moving average seems to be acting against us here. Now, if you're a student of mine, you know that we get a lot of information out of those little friendly moving averages. I don't use them for entry triggers. I don't use them for anything too complicated. But we look at where they are and how the market is reacting around it. So we spend all the time above the moving average as we're going higher here, and now combine that with bull traps that we see coming off those highs, along with the simple fact that we're unable to really get and stay above that moving average now. Well, it tells me this. It basically tells me I can't guarantee tomorrow, but it does look like we're going to get a retest of this range high at 34. That's when you definitely want to be looking for buyers to fail and to sell this thing right back into that range. The aggressive sellers right now can look for opportunities back down to that low. Once we get to that low, I'll be looking for buying opportunities to fail so I can sell it back into that range. And then, of course, you've got the 50%, the bottom side of the range expansion, and then don't forget, you got first try down there at 25.3. If I had to guess here right now, if these bears can hold it, we're going to find ourselves either getting, again, I would say 1130 is pretty likely. 1125 is definitely what we'll be shooting for tomorrow if you're a bear. And again, you're not really going to know it for sure. Right now, we're kind of just, it's a little bit of a, finger in the air, what do I think right now? But again, we got a little bit of proof here. Back to the high of that range, buyers fail, get sucked back inside that trading range, and then again, possibly all the way back down, right, to that first try earlier on this week. And then we go back into first try, second try to the downside, and we're going to see more from there, guys. I don't think we're going to get a chance here to take a breather tomorrow. All of these markets look incredibly ripe for trading opportunities. We may just see gold just tumble back into that range and stay there tomorrow. So if it does go back into that range, breakouts, right? Fade all those breakouts. And then let's wrap it up here with the euro. What a great newsletter this evening. What a great week we've had here. Boy, oh boy, what a great way to kick off the end of summer. I guess wrap the summer here, right? With some more volatility. How about that euro? Now, the euro's got some pretty important clues here. Trading range. Okay? First try, no second try, but we've held above the 50. Members, you should know what that means. Also a gap. That gap down at 1210, I think, is speaking to us here this evening. Let's see what we got here. Now, euro is trading inside a range. Now, again, notice I said inside a range because we've only got one try from those buyers to break out of the range, which means we're still looking for failures to sell back into the range. Now, I have reason to believe, though, that we will probably get that second try. Here's what I'm thinking. Oh, boy, no, not thinking about snow yet. Sorry for you folks out there in cold weather climates. The blizzards are a few months away. At least we hope. Let's see here. We go up, break out of the range. There's your first try. That's easy, right? Second try on the way. Here's the most important information that I see. We still haven't cleared that range, right? That's where you get the big bullish clue. Here's the most important clue I see on this chart right now. the 50% area wasn't even blinked at. Now, we know that typically what happens is after that first try, typically we'll come back in, we'll rattle around that range, and we'll stay. If we stay above 50%, we'll go make that second try. If we don't, we'll head back to the opposite side. We didn't even blink. It was like that 50% wasn't even there. It doesn't even look at that 50% line, which is relatively rare. It doesn't happen very often. Usually it's just glued to 50 and then right back up. So that immediately tells me we have an air of bullishness. So here's scenario one. If I'm right about my bullish kind of clue here, again, really, it's just holding above 50%. That's the biggest bull clue. I would say now, here's what we're looking for. Looking for a new higher high, and as long as we see a new higher high above 1335 and stay above 1255, we are bullish going into Wednesday's session. I repeat, I need to see a new higher high above 1335 and then stay above 1255. So new higher high and then stay above 1255 to be a bull. If I see a new higher high and then we come back in and we fail to stay above it, we're selling it back down. Now, where's our target going to be? This is what tells me that we may see both of these tomorrow. Now, we've all heard this before, right? Gaps love to be filled. Gaps love to be filled. That's a gap that started this morning right at the Globex Open. Well, it was actually last night, 6 p.m. You get the point. Bottom line is, that's a gap. Gaps love to be filled. If these buyers cannot hold above this 1255, we are going to see that gap filled at 1210 and then most likely finish the run back in the opposite direction. Now, that doesn't mean that even if we do get a higher high, we still can't go back in. All I'm saying is if we end up below 1255 tomorrow, whether we make a new higher high or not, that gap is almost guaranteed to be tested. So use it as a target, use the low of the range as a target, and then use that prior swing. Now, one last thing. We have a phantom trend line on the chart. Remember we said last night on the newsletter, I talked about the fact that when we have range-bound markets, don't get fooled by this big, wide channel. This is what you call a phantom channel. It really should be called give me all your money and nobody gets hurt channel. Because really all it does is it gets buyers buying at the wrong location and they're going to fail on this channel. Now, the reason why is because this is a range. There is no trend. I know it feels like there is because I drew some creative trend lines. But guys, that low comes from last week. Do not trust that information. This is a brand new week. This is a brand new world as far as Euro traders, crude traders, S&P traders. That's why you don't see me going back a year in the past. There was a different world back then. Started off on Sunday, go forward now. Here we have an example of a phantom channel and a phantom trend line. The reason I point this out is because I want to follow up with what I said last night, and that was when you have these range-bound markets, be very careful. Don't take the bait of these little phantom channels. It looks very good, but it's very unreliable. And again, it goes right back along with if we can't hold above that high, we go back to fill that gap at 1210. Boy, oh boy, how time flies. We're already half an hour into this newsletter video tonight, and I could keep talking I really could keep talking about this. What an exciting week here. What a great week we've had. I hope you guys are learning something. I hope you're earning something. If you couldn't make any money off that crude drop today, boy, oh boy, we got to work together tomorrow and make sure that we give you guys a plan. Don't forget, download those charts. Grab your free pass, and if you have some free time here, I know we've covered a lot here today. If you got some free time, don't forget, join our free trial. I take a lot of pride in the fact that you're going to learn more with my trial in 1 week than you will anywhere else on these interwebs. I can guarantee you that. And of course, we offer 3 levels of membership: beginner, intermediate, and advanced. Whether you're brand new to this great business and you want the right way to start your career, or you're a grizzled veteran, but you still haven't been able to put this whole thing together yet. Remember, being successful in day trading is being successful in anything else. It's not enough to know the numbers. You got to know the combination to open the lock. Guys, my name is Joseph James. Thanks so much for watching tonight. Shall we do it again? 8 a.m. tomorrow morning. Open the trading chat room. 8 p.m. tomorrow. We'll do the newsletter over again. I'm out of here. I need a Tylenol or something. I'm out of here. Adios, amigos. Bye-bye for now.